Welcome everybody. Let us go through the market profile charts for Nifty today and potential auction paths. Softwares used for today's presentation are Bell Market Profile and Bell Order Flow. You can visit their website by clicking on this link here. It will take you straight to the website of Bell TPO. You can get the details of the products there by clicking on the products tab. So that's how you can get all the information regarding these two beautiful softwares. Myself, Dean. You can click on this link to follow me on Twitter. Let me first go through the disclaimer. Please keep these important points in mind before you go through the market profile education material offered on this website. Market profile education information shared here is not a trading recommendation, and we are not in the business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. Going back to today's market profile analysis. So let me go through all the updates I have put on Slack. In the morning, I put this thing up. Here I showed that the initial shape which was developing in the morning was a V shape, and there was a potential failed auction above yesterday's poor high. That poor high got repaired in the process here, but the failed auction could not gather any momentum lower. Also, this reference was there, and we needed to find acceptance in this zone to actually get some lower follow through. Like if we had accepted here, then we could have gone down and tested lower references, but clearly none of that happened. So what happens? Let's go ahead. So if the same development we look at through order flow chart, we have some interesting observations to look at. First and foremost is look at yesterday's closing bar, and you can see a lot of deep green prints at the top of the bar, and today we open almost at the same level, go above that bar, and again come back. But look at the amount of buying that happened at the very top. Very few buyers seen. What it means is that there were not many stops above yesterday's high. So, and even no new buying emerged once prices got above yesterday's high. And looking at this lack of interest, prices again just slipped lower, tested yesterday's VWAP and just hovered around there. I mean, nothing happened into this trading. Let's see what happened afterwards. On Bank Nifty. Bank Nifty, again, you can see a clear V shape developing in the morning. Again, no continuation. I had pointed out these areas. If we got any acceptance in this range, we would have gone lower. Acceptance in this range would mean that these buyers would be challenged, but we could not get anything in this area, and that is why prices would never really test lower levels. So Bank Nifty also was pretty subdued in the morning. In the afternoon, we had again the same sideways movement continued. The failed auction in the morning, it could not gather any follow through lower. Every time the price came in this zone, it just struggled here to find any continuation low. Not even this small reference was tested by the sellers. So naturally the market was getting too short in this zone, and there was a possibility of an inventory adjustment rally. But for that, even if we had tested this particular reference here, then that rally would have been substantial. At least it could have, tagged today's high. But the opening was open auction inside the range, and whenever this kind of opening happens, there is seldom, the expectations for range are very low. Not even, we could not even match yesterday's range. So the value area was contained completely inside yesterday's value area. So I mean, nothing day in Nifty, even in the afternoon. Same was the case with Bank Nifty. This B shape was getting pronounced, more pronounced, and in this kind of a scenario, what we usually look for, if the market is struggling to go lower and the volumes are very low, what usually happens is we identify this morning low, and there is a chance that we break below that low, fail, and then move higher. So what happens is any early buying that was happening in this B, their stop losses are taken out and prices just rally higher. That was what I was expecting when I saw this B shape. Because of the low volume, it was increasingly difficult to expect this particular potential auction path to be followed. So, but uh, we got that FA. Let's just move ahead in our analysis. We'll see that we actually got that failed auction. Before we move on to that, let me just show you this interesting action which happened on NF order flow charts. So what happens is around 13:40, that is 1:40 in the afternoon, we get an attempt to rally. As I said previously, that the lows at the lows, the Nifty was getting exhausted. That meant that there was a possibility of inventory adjustment rally. We tried to attempt, tried to move higher in this particular bar, and then again we moved higher and took out the high of this bar. You can see some buyers trapped at the top, and we had a nice follow through lower. What I was expecting was a possibility of coming down, maybe test, and then again continue the move lower. But as it turned out, if you can look at the next chart, instead of getting nice follow through lower, what happens is, again, here we got trapped buyers, now here we get trapped sellers. Again, you can see in this box lot of red trends, but the close is of the lows, and next bar moves sharply higher, trapping any late sellers that sold in these two green boxes. So that was a nice scalp by smart money. Since the range was very low, I mean every point was being fought for, and low volumes suggested that there were no higher time frame traders trading today. That does not mean there were no smart traders in the market. Higher time frame smart traders are there, and higher time frame dumb traders are there. So today we had day time frame traders, and the smart traders amongst those got their longs here and got out on a 10-point scalp. So that was a possibility. I had pointed it in the Slack group. So that was a nice scalp trade. If you are using order flow charts, these kind of patterns, they do repeat every now and then, and it was a nice opportunity there. So moving on. So finally, let me just look at the whole day in Nifty, and as you can see, going into the close, it was a nice balancing kind of a day. Nothing happening. A very squat, narrow profile. Now, what this narrow profile tells us is that we had a late spike in this day. Next day we try to rally 2-3 times, and today what happens is that we just continue this balance. So if somebody was buying here, they felt very good here. Somebody adding in this zone, is now feeling anxious because there was no follow through. So uh, key auction development required in case of Nifty is shown on the chart. A few possibilities. Either we just plainly continue this balancing activity and move sideways for a while tomorrow, complete this distribution process, and distribution or reaccumulation we cannot be sure right now, and then try attempt to take a directional call, either move higher or move lower. So that is one potential auction path. If at all the bulls are still in contention, what might happen is they might open the prices higher and move higher to test these two references, 1 and 2. And again, once we reach in this area, there are again two possibilities. We have a nice gradient here, so sellers were have rejected this particular area. So one of the two things might happen: either we get a immediate rejection. In that case, we will test this point of control and possibly repair these low references, this poor low as well. But if we start finding acceptance in this zone, if we start absorbing this rejection, the sellers from here, then we might look for higher prices. uh, Bulls buyers have not done a good job at all today. They could not manage to take out days high. The range was very narrow, volume was extremely low, and all this points to very poor trade facilitation by the buyers. And in that case, if we open lower and start finding acceptance below this reference, this lower HVN from yesterday, then there is a possibility of testing this HVN and this HVN from third. So we can get a nice tradable move if we start finding acceptance here. We can then wait for a pullback to this reference or even this reference, and then look for this level as the first target. And if the sellers have it in them, we can find acceptance in this range, we can even go lower and test the lower reference. So these are the potential auction paths for Nifty. You can use these charts, they are available on my website, and you can use them as a reference for tomorrow's trade. So moving on for Bank Nifty. Again, Bank Nifty has that clear V shape going on. There was a nice development. This is the failed auction which I was expecting. We got that, but just look at the follow through. At this, I mean, smart money tested below morning low in C period. Also, this particular HVN was there, and we did not find anything at the lows, and we again moved back up. But if the buyers were strong, they should have gone higher and tested the high for the day at least, but they even did not do that. So the end result is pretty simple. We have a nice 2-day balance. Today is a completely inside, as you can see. This particular day is completely inside yesterday's range. So we now have a 2-day balance here. So in auction market theory, always a balance is followed by an imbalance. So looking at the auction paths, again, we might continue this balancing activity for a while and then start the imbalance phase, or straight away the buyers may take control of this auction, and if they open the prices higher around this high, yesterday's high, the 6th of March high, if we start finding some acceptance, that is the key auction development required. If we get that, then there is a possibility of testing all these higher references. There are two of these anomalies here, one here and one here. If you can see these two letters here, this is an anomaly, this needs to be repaired, as well as this HVN, where earlier the selling happened. So if we come here, absorb the selling, we can even go for higher prices. There is a possibility we come here, these sellers here, they might try to defend and we might get immediate rejection. So this is the possibility on the upside. Again, if this is just a pullback, because we have not been able to trade above this particular HVN, which was one of the targets. After this narrow range development, we expected the prices to go up. It was tagged, but we could never find any acceptance above this point here. So if this is just a pullback and sellers come back with force tomorrow, they might open the prices lower below this failed auction. If we start finding acceptance, then there is a possibility of testing this lower HVN. Finding acceptance even below that, we'll see even lower prices. So that is what I expect on Bank Nifty. So these are my potential auction paths for tomorrow. There was one question by RP. It said, Dean, if possible, please share your thoughts on the 80% rule. When auction enters previous day's value area, 80% of the time it will travel through the entire value. Works well if previous day is a balance. Yes. Let me go back to a chart. Yeah, this is Nifty chart. This is the chart I was looking for. Okay. So this day you can use as an example. This was a nice balance which we were talking about. Even on volume profile, you can see majority of volume was traded in this range. Now what happens is that when the market is in balance, we know one thing for sure, that buyers and sellers are matching each other. So every time the buyers buy, sellers come in at higher levels and sell. Every time the sellers try to take control, buyers show up at lower levels and they buy. So the edges of the balance have opposing activity. At the highs you will see sellers, and at the lows you will see buyers. Now when there is this a balanced situation where both buyers and sellers are matching each other, generally to topple the auction to one side, we need to check whether either of the party has some strength or displays support once the price starts going their way. So what happened here is, the next day we opened higher. So clearly the buyers had a chance to take this auction further. We came back lower inside yesterday's value area and again moved higher. Actually, instead of getting a nice follow through, what we got was this kind of a narrow open auction outside range kind of a thing. Prices were just hovering above and below this open, and I put a message in Slack that we have opened outside range, so there was a possibility of a dynamic move happening once this balance was done, either accumulation or distribution. But if the buyers were strong, they should have immediately taken control of the auction and moved higher, but they did not. What instead happened was they tried to move higher. They again tested whether the buyers had strength. Here above this high we had tight balance that did not give us good signals for continuation. Then we have this potential failed auction that actually sealed the deal for any buying that was happening. So all the buyers who bought in this range were trapped, and then the down move just it just feeded on this early buying which was happening and made all of them to cover. So what happens is, you have this particular development in the background where the buyers and sellers are in balance, then you give opportunity to one side and you don't receive any follow through. That is the time when you can take a contra trade. Now just because there is a balance on the previous day and we open and then enter the value area, I won't use the 80% rule that way, because in that case then why we did not get complete travel of the value area today. We did open here, we moved higher, we hit we repaired this poor high, hit any stop losses about this poor high, but then we just could not manage to travel the value area even, because we need to have that context in place The early development in Nifty also was a nice P kind of a development, similar to Bank Nifty. And when this kind of a development happened, immediately we were, alerted to a fact that sellers did not have it in them today, and the 80% rule might not play out. So I don't look at 80% rule and trade strictly based on that. Instead, what I do is I try to assess what the auction is trying to do, and once I get a clear signal, then only I try to place a trade. So I think that covers the question regarding 80% rule. So I think that is all for today. That is all we have for today. There will be a recording for this video log. You can click this link and watch it. So that's all for today. Thank you for listening, and we'll meet tomorrow.